Mortgage Talk. I'm Desiree Stewart with Equity Resources. This is
Mona Lisa McCorkle with the McCorkle Group, brokered by Call It Close International Realty. Good morning.
So we're just here to talk about the process of buying a home. I'm going to give you the lender perspective, and Mona Lisa is going to give you the realtor agent perspective.
Alrighty.
Yes. So there's a lot of questions we can answer. We're just going to go over a couple. So where would you like to start, Ms. Mona Lisa?
Okay, I think one of the things is oftentimes I talk to prospective clients and they say, "Oh, it would be nice to buy a house, but I don't think I'll be able to buy one." And then when I ask the question about, "Well, have you inquired?" "Well, no, we don't know what to do." So can you share with our viewers what the process looks like from start to finish when you get the call or when you reach out to them? What happens next?
So I always tell people the starting point is the application. If I don't have any of your income, credit information, I don't know where to start. I can't say, "Oh, you qualify for this amount of home," when I don't even know where to start. So the starting point is always the application. After we get the application, there's always going to be two terms you hear, pre-qual and a pre-approval. I don't do pre-quals because I don't base it off of information that the home buyer is telling me. Because sometimes I've seen it where I was able to calculate more income than what they actually told me. Could have been overtime, bonus, and stuff like that they didn't even consider as their income.
Yes.
We also use Social Security, disability income, child support. That just depends on the age of the child. But getting income documents, getting credit pull. If we know there may be some credit issues, I always like to do a soft credit pull so it doesn't affect anything as far as the credit score. But once I get those two things, that's when I issue a pre-approval. Or I'll issue an email suggesting and making recommendations on how to improve the credit.
And this is one of the reasons I love working with Desiree is this. One of the things that I share with clients is that I work with lenders who don't say no. So you won't get some cold letter in the mail simply saying, "Oh, you are not approved." But instead, as she said, she kind of walks out a plan or gives you some type of plan. So if you are not yet qualified for the loan, it doesn't mean that you can't get a house. It just means that we're going to need to partner with you for you to do some work, and we work together so that you become qualified to be able to make that step.
That's right.
And another thing you talked about was about income. One of the questions that I often, or one of the comments that I often hear from people is, "Oh, well, I'm on a fixed income. I can't afford a house." Let's talk about loan officers, lenders love a fixed income. Can you tell them about that, please?
So, when we hear fixed income, for some reason, people think that's not qualifying income. Well, it is. Social Security, any type of income that you steadily get per month on the same day, nonstop, it ain't going to change. That's just fixed income. So it's not like if you work at Mother's Cone, you work 40 hours this week, you get paid $1,000. You work 35 the next week, you get paid $800. That's not fixed income. Fixed income is just Social Security. It can be child support. It can be disability. It can be pension. It can be anything that is going to be the same time every month. So we like that income.
Exactly, and that represents stability.
It is easy to trace that. Oh, you've been getting that for the last 2 years. That's fine.
Exactly.
We can use that.
So don't let that be a discouragement or deterrent for you reaching out to a loan officer about getting the application because that's regular money. That's regular money that can be banked on.
That's right.
We wanted to just kind of get rid of that kind of little fear that some people have sometimes about, "Oh, I'm on a fixed income." Fixed is wonderful. Let's fix it together.
That's right. That's right. I know another big thing that's coming up right now, and I know it's a sticky point of especially people on the fence, is the house prices. Yes. So we do know, and I always give the example when I bought my home in 2015, there was 15 houses that I could look at just for me to look at. Now it's 15 people looking at one house. So having a good realtor actually comes into play with that too, because I've seen, you've told me it's a lot of offers in right now, but this is what I want to do. Mona Lisa would go in, not hardcore, but it's like, look, I have a solid approval here. And just explain, what does that look like when you are helping people negotiate on a house that they really love that's within their approval range?
One, that's a good thing because first of all, I like to have communication and just have that established with clients up front. We talk about not only your needs, what are your wants? And then sometimes we have to meet in the middle, because if you're pre-approved for, say, $300,000 and the list, based on the current market, your list of needs and wants takes you in the 400,000 range, well, guess what? We're not going to get there. Therefore, it is my responsibility as the professional agent to be able to kind of help you navigate those things that definitely the must-haves, but then also getting some of those things that you want. One of the things that I say to people also, especially first-time home buyers, we all have dreams of the special house that we want. The first house is not your dream house. The first house can be your stepping stone. The first house can be your means to wealth and equity that will facilitate your moving to your next home.
Right.
And so just kind of get out of that mindset of this has to include everything. Yes, if you have 5 children, yes, you need more than 2 bedrooms. We can agree with that.
Yes.
But just kind of navigating how some of the other things work, and I think that helps. But then when we get into finding something that is solid, that is within your price point, within your pre-approval range, and then negotiating from that point, there are a lot of factors that I, as your realtor, are going to be able to look at, but also share with you so that you will be comfortable that we can make a wise decision together. I'm a great negotiator. I love that process, actually. However, given the circumstances and a number of things that will determine how much we might be able to negotiate. We can't. So if there's a house that's been on the market for 10 days and you absolutely love it, I'm not trying to advise you to put it in for $40,000 under list price. I'm going to tell you the truth with a smile, and either you're going to want to do that and we'll keep moving. Ultimately, though, I listen to what you say. I can advise you repeatedly on what the best practices might be from my professional perspective of how we should go at it. But ultimately, I have to do what you say because we have an agreement, and that is one of my responsibilities to you. Therefore, if there's a denial on the side of accepting the offer, then we can go back and look at some of the things possibly that the realtor said and fall more closely to that the next time around, or resubmitting the offer.
Yeah. Yeah, that's good, because most people just don't know. I have people come to me, well, Desiree, that house is too much. I don't think I did it. I'm like, we have your pre-approval. You need to have that conversation with your realtor, and then that's their expertise. They're going to be able to tell you, it's been on the market this amount of days. We could offer this, or if it just came on the market, we probably were not going to be able to offer much less.
Right.
Like, it's just educating them on what this looks like, when you have your approval.
But then also a part of that is when someone calls me and, we're checking out houses and things, I do research beforehand.
Good.
I'll pull up the MLS. I'll run some comps sometimes, just some preliminaries, not anything deep. And then if someone sees a house and then they say, you know what, I'm thinking about this one or this too, I definitely pull comps to see how it's priced, whether it fits within those parameters that the comps are in. I share that with the client and just to let them know, okay, well, this sold at this during the last 60 days maybe, or the last 3 months, or whatever it is, so that they can have a guide and make a better informed decision on what to do and what we need to make an offer about.
Yeah, that's right. That's right. Well, that is good information, Mona Lisa. House price is definitely one. The second one is definitely interest rates. And what I tell people, we don't get into, oh, yeah, this is a bad interest rate or anything like that. It's the fact of this is what rates are right now. And that's just the honest truth. We don't go into, oh, wait 3 months, it might be this, because, we don't know.
Yes, we don't know.
We can't.
Yes.
I mean, I have people that I know that's been in the mortgage world for 30 years, and they still can't pinpoint when the rate's going to change. So, but I always tell people, you're not fixed in that rate. It is a fixed 30-year rate. It could be a fixed 25 or 20-year rate. It's the fact that rates will change. Why wait 5 or 6 years to the rate to change when you could have technically got in a house at that rate, still at a comfortable monthly payment. And then once the rates do go down, guess what? I'm gonna call you and say, let's go ahead and refinance.
Yes.
Let's save you some money. But I just hate when people don't, get off the fence just because of one factor like the interest rate.
That's the thing that I like to share because I am a little bit older than most of my clients. Yay!
Just a little bit.
I can share some experiences and some wisdom, hopefully. And I remember right before my 24th birthday buying our first house. Interest rates at that time were about 10.5%. That's what they were. That was the norm then. All I knew was I was about to have a baby. I wanted to raise this child. We wanted to raise this child in a home and not an apartment. And guess what? It didn't matter what the rates were.
Exactly.
We found the house that we could afford. We bought the house. And actually, I didn't sell that house until maybe 2017. And I purchased it back in 1987.
Wow.
And so this is a long time. And this was in the Richmond, Virginia market. But just looking at, don't get so set in and focused on a rate.
Right.
One of the things, what is it that we say? We say, date the rate, date the rate, marry the mortgage, marry the house. And so if there's a house that's, I won't even say your dream home, but something that you know is going to work for you now, don't you dare sit on the fence being concerned about rates going up and down, because while you're sitting on the fence, the house prices are continuing to go up. And so if the rate, regardless of what the rates do, that house is going to cost you more.
Right.
But another thing that I always say, and no, I am not a loan officer, but I work with some great ones. That's why I know a lot about it. And the thing is also, though, buy the house now. Who knows what the rates might look like in 6 months?
Yeah.
Go into the house, pay your note on time. In 6 months, you can do a refi if the rate is significantly lower. And that's another way to look at it as well. So don't dare sit on the fence waiting for rates, because right now, nobody knows what they're going to do.
There's no like, oh, do it by this date. Can't nobody say that at this point.
Exactly.
So,
and can you talk also about buy downs?
Yeah.
Because that, even though some people might not be able to do that, but there are others who might have money that they can afford to pay for an interest rate buy down, or that's something that could possibly be negotiated in the transaction with seller concessions and things. So share a little bit about that.
So
please.
with the buy down rate, it can happen in two ways. So the buy down can come from the home buyer, or it can come from the seller of the property.
Yes.
So most people take advantage of the seller buying down the interest rate because what it does is whatever the rate is right now, it's going to go up a little bit per year.
Yes.
But it still gets you in like an interest rate that you're comfortable with in the beginning. So just say the 3-2-1 buy down, by the third year, you could actually have the interest rate that you want, because interest rates should have been and came down at that point, but still it gets you starting with an interest rate that the seller can actually pay for it, and you will be comfortable with that monthly payment.
Exactly.
Yep.
Exactly. All righty.
Yeah,
I'm
got
loving
the
these
buy
questions.
down.
I'm loving them. Okay.
So go ahead. Look, we got a lot of stuff to say, y'all.
Yes, we do.
And we want to help the people.
Yes, certainly we want to help the people.
Yeah.
But one of the things I want to talk about is the do's and don'ts.
Yeah.
So I have these wonderful clients, who have talked to you. They've gotten their application completed. It's in the underwriting process. Everything is looking real good. We're waiting. They're excited. We've identified a house. All of these wonderful things have happened.
Yes.
Please share what the do's and what should they be doing, and what should they absolutely not do when we're in this process.
Yes. So one of the things, the two things I always say, the two factors is income and credit. So those two, if I approve you at that, they need to stay at that. So if you have income that I approve for you for your job for whatever amount, you're approved.
Yes.
Please don't go out here and get another job and make less than what you actually was approved for. Two, the credit. So we always say, even in the application process, before we even get a pre-approval, one of the questions I ask is, do you plan on opening any new lines of credit, any loans? Like, it's part of the application process. Are you planning on doing that? And some people tell me, yeah, I know I'm getting ready to buy a car. Like, I kind of know up front, and I try to see what it looks like far as us, if there's going to be some credit improvement we might need to do, then we kind of have maybe a couple months that, if someone, needs a car to go to work, they got to go to work. So they got to get a car. But if you are approved and you are having no need to open up any new credit cards, any loans or anything like that, please do not, because that can affect your credit. We actually have ways of seeing if any new credit is open.
Yes.
So there's a credit inquiry form that you have to fill out that says, okay, some of these items popped up as new credit. Explain. Did you get new credit? Did you not get a new credit? Did you just inquire about it? So those are things like in the underwriting process that you will be asked. So, but I try to make it very clear up front. Do you plan on opening any new lines? Do you any credit cards, buy a house, TV, washing machine, none of that? Like, but not yet.
I'm gonna slip this in, y'all. They do find out. It pops up. It shows. And one of the worst things that can happen is here we get a clear to close.
Yeah.
And then somehow in between the time of getting that clear to close and the settlement date, then boom, we get a notification that something just popped up on the credit. You went out and bought a car. You went out and opened up a credit line or something. That even though you might see it as insignificant, is going to be something that will significantly or substantially change possibly your credit approval.
Yeah.
And then another thing is, please do not, read my lips, do not co-sign for anyone during this process.
No co-sign.
Preferably not at all, but do not co-sign, because once you co-sign for someone, you are just as obligated to make that payment as the person who's holding the property.
Exactly.
And so that is a big no-no. Do not co-sign for anyone. Even if it's your mama. Tell mama you're about to buy a house. She's going to have to wait. Smooches.
Look, I think that came up very clear. I think if you have questions,
do not
always reach out to me, Desiree, or Mona Lisa to understand what we mean by the do's and don'ts of the credit, because credit is a huge part of you getting a home. So we want to make sure everybody's clear on that one. Let's move on to the different types of home buyers. So we have first-time home buyers. We have downsizing home buyers. We having, what was the other term?
Those who are upgrading.
Upgrading home buyers. So we have 3 different home buyers that we work with, and we're just going to break down, what does that look like? I work with quite a bit of first-time home buyers, so I can break that down, and I'll let you do the other 2.
Okay.
So first-time home buyers in the state of North Carolina, if we're doing any type of down payment assistance, is basically you have not owned a house in the last 3 years. Most people would think that I don't have, I've never owned a home. Yes, that qualifies you as well. But a lot of people may have sold their house 10 years ago. And guess what? They are considered a first-time home buyer.
And then another thing I'm going to interject also is, even say if you are on a deed for another piece of property, even with that, so be very careful when we talk about the distinction of a first-time home buyer. You cannot be party to any property with your name being on that deed. So as long as you're clear of that, and within the last 3 years, then you'll be fine and you'll be eligible to be qualified as a first-time home buyer.
Yes, thank you for saying that too, because some people say, well, I don't live in the home, but I am on my sister's deed of the house, or my parents,
Exactly, or could have been heir property or something of that nature.
Yep. So no deed, that just means your name has not been recorded on any property currently, or while you're getting ready to buy a new home.
Yes.
And so let's go to the upgraders or the downsizers. Which one?
One of the things is, because of the demographics and the time in which we live, there are lots of 55 plus, and not that they're the only ones down. So there's a lot of downsizing going on, in which someone might want to list their current home because it was larger. Now they're empty nesters. The children have moved out, or the children are now adults with their own families. And so people are finding or having the desire to want to kind of downsize, get into something a little bit smaller. We can assist with that as well, because oftentimes when that house is sold, there's great equity that can either be used for someone to purchase a downsized house with cash or with a very small mortgage along with that. And so Desiree and I work that also. And then also one thing that we didn't talk about, but let's talk about our veterans for a second.
Yeah.
The VA loan is I think it's one of the most significant loans that's out there and available for those who have served our country. But because for whatever reason it's gotten a bad rap, it's gotten a bad status, if you are a veteran, and you desire to have a home, I promise you, we both work with veterans. I can specialize in, kind of assisting and providing some information. Actually, I'm married to a veteran proudly, but I'd love to be able to help you because I think there's a lot of misinformation with regard to what you can buy, what your credit score has to be, what your debt to income has to be, all of those things. Desiree and we certainly answer questions all day long. Just because you call us to ask questions doesn't mean that we're going to have you signing a contract saying that you're obligated to purchase anything, but be informed.
Right.
And once you are more informed, you can make a better decision on how you need to move next. Because with rental rates right now, anywhere from I'll say maybe $1,200 a month on up, you really could have a mortgage.
Yeah.
And if you're a disabled veteran, we talk about that fee that is associated with the VA loan.
Funding fee.
The funding fee, if you are a disabled veteran, you do not pay that. And so there are lots of things, to help you navigate and to be able to manage getting into that home. And then even with 100% finance, North Carolina financing has a down payment assistance program that you can get up to $15,000 that will even facilitate or assist you in paying some of the closing costs. So that's money for you to have, and you deserve to have that. So if you're a veteran and you're wanting to buy or whatever you're wanting to do, call me and Des. We can hook you up.
That's right. The VA, I advocate VA loans, especially for veterans, because just prior to coming into the mortgage realm, I worked in the bank, and I had so many people that had conventional loans, and I'm like, but you're a veteran. Why didn't you do a VA loan? And it was really more, they just didn't understand. They did not understand how it worked. But if I cross a veteran, you best believe we definitely doing a VA loan.
And frankly, even until I took the course to better understand, I did not realize the great wealth of, I'll just say, what it helps you to do. And not only does it allow you to buy one house, you can buy multiple houses as a veteran, but there's a way to navigate that. And you need someone who is informed to be able to walk you through that process and that journey, because, you can gain wealth that way as well.
You sure can. Yeah. Anytime you can go buy a house with 0 down payment.
Yes.
And even just to piggyback on the funding fee is not a down payment.
Right.
So I always tell people it's a fee that the VA actually charge.
Yes.
But it's nowhere near paying a down payment.
Exactly.
So even if you do have to pay the funding fee, you're still getting the best option, because you're still not bringing $15,000 or whatever in down payment. So
Exactly.
So yeah, the VA loan is definitely a good one. So let's go back to the downsizing person. Like when you have someone that comes to you, they're like, Mona Lisa, I've been living in this brick house, this mansion with 15 bedrooms. And say, I'm ready to downsize. What would you say to them?
Yeah. First of all, have a conversation.
Yeah.
We just have a conversation about, what their motivation is, why they're looking to downsize. Are they going to still stay in the area? Where would they like to go? Just kind of checking out the house, seeing what it has to offer. Those types of things. Getting information. The first meeting is an information gathering session. If they sound that they're very serious about wanting to hurry up and sell the house, to move, to downsize, then, of course, I'm going to run comps in the area to kind of give them, now I don't set a price, but I give them a range. This is something that we look at to kind of see where it might be best to market the house as far as the price is concerned. And then also, while doing that, if they're going to be in the same area, then I certainly am going to be looking at other things based on the criteria that they had given me for the smaller house that they intend to move into. And then working with Desiree, the lender, we're going to find out how it's going to be best to kind of make the transition, how we can pay off the one loan, or perhaps they have no loan.
Yeah.
Perhaps they have no loan because they've been there for many, many years. Therefore, what is the wisest, the smartest way for them to utilize all of that equity that they have and then be able to turn it into something smaller that will be much more livable for them while they're in their retirement phase or just wanting to more enjoy life and not be concerned about a mortgage. So certainly we can help you with that.
Yep. Downsizing is definitely, I even think about now in my house. I'm 40, but I'm like, do I want to still go up these steps?
When we had a house built 5 years ago, we just have steps to enter, nothing in the house, and so those are all considerations, though. And even I've had some younger people who bought houses, and it's kind of like it's not a worry now, but I think I might be here for a minute.
Right.
So, nah, let's just get a rancher.
Yeah. Let's get a one level.
Yes. Okay.
So the downsizing, that's good.
Yes.
Giving people the guidance of how that works. Now we're looking at the upgrade home buyers.
Yes.
So we have someone who's been in their home, maybe a smaller home, looking to family to grow, advancing their careers, Tell me what that scenario looks like.
I love those situations. Oftentimes when I work with, maybe say the couple was, it might have been a couple, it might have been a single person, it might have just been them when they initially bought the townhouse or the 2-bed, whatever they bought initially. That was their starter home. And maybe they've gotten married, maybe they've had children, or for whatever reason they decide, oh, okay, I like this home ownership thing, but now it's time for me to get to something a little bit bigger. And again, that's where, first of all, you talk to me. I won't say talk to a realtor, talk to me.
Right.
But with that, because again, we have the conversation. Anytime you have a realtor or a lender, it is crucial. I won't say so important, but it is crucial that a rapport is established and you feel comfortable.
Right.
You hire us. You choose who you work for. Therefore, it needs to be someone that you feel comfortable with as far as asking questions, things of that. You need to click. You need to connect. And in that conversation, looking at someone who maybe bought a townhouse starting out, and now they say, you know what? I've had a child. We're probably wanting to have a couple more, and we're looking at that. We're in a better financial position now. So how do we go about that? So, of course, we're going to see what they owe on the first mortgage. We're going to look at what the equity is based on the current market of that house. And Desiree can help with that. I can help with that. And then we can give them an estimate of how much they're going to be able to get the next time around. But guess what? I so love it that because in most all, I won't say all, but most all of those cases, if someone has been in their house for 3, 4, 5 years, they've built up some equity.
Yeah.
They've built up some equity. Therefore, when they sell it, they will have some money that they'll be able to utilize as a down payment or some part of the financial contribution to buying that next big house. And then regardless of what the rate is, they might even be able to afford buy down if that's necessary. But they'll feel more comfortable and they'll be more used to paying a mortgage anyway. So I love when that happens, and especially when they've worked with me both times.
Yes.
Because honestly, just to kind of see them.
Yeah, people come back.
Yes, and I love it. Yeah. I love it. And but it's kind of like, see, we talked about how this is your first house, but it doesn't have to be your forever home.
Right.
And so when you've done that, you follow the steps, you've gotten to this first home, and now you realize, oh, I've gotten the hang of riding this bicycle. I'm going to the next thing.
Yeah.
And I love it. And so yes, that's
seeing the families grow and things like that's just awesome. And they're like, well, I got to call my realtor Mona Lisa. I got to call my lender Desiree and let them know what we're thinking, so that we can set a plan to get to the next level.
And we do have people that do that. I had someone who called me just yesterday and said, Mona Lisa, this is what's on the radar, what we're looking for.
Yes.
I sold their first house. I helped them buy this second house. Now they're looking for something much grander. And guess what? I'm going to be on the lookout. And they said, well, not right now, but maybe in the next 12 months. Therefore, they are alerting me to what they're looking for. I am going to be working diligently to kind of help them pull it all together. And we will cross that finish line together when they're ready.
All right. So the next thing we're going to move on to, what do we have a ideal home buyer? Does that term even exist? On the realtor side, when you have someone that's coming to you, you're the first point of contact. They ain't even got to me. They straight Mona Lisa. I need to buy a house. I want to buy a house. Now sometimes I'll get a call. I want to buy a house by the end of the month, and I have to be honest with them. That's probably not going to happen. But we can set a plan to get you in a house.
Yes.
But when you have potential home buyers come to you and say, I want to buy a home, and you're like, okay, let me see if this person is, serious about buying a home.
Right.
What are some of the, I don't want to say red flags, but what are some of the, things that you see in people that they're definitely serious about buying? What are some of those things?
I did one of the things that, when we're talking about it, and we're engaged in conversation, you share with me your desires, your wishes, what you want to do. I can kind of gauge the excitement.
Yeah.
One of the things I probably said this 100 times before is communication is key.
Right.
That's a big thing. So, you reach out to me, I reach out to you. So someone who is going to maintain communication with their realtor, with their lender. But then another thing is that, as Desiree has said before, this is a process. It's a journey.
Yes.
It's nothing that we just jump from A and we show up at the table with the keys. It doesn't work like that. And so with that though, if there are some areas that you need to work on, I give assignments too. I give assignments. And so, but when someone is hungry to buy a house and they know this is what they want, I'm going to work hard with you. And when there are these, say, in a week's time, the lender needs XYZ from you. And this is what I would like for you to do. Someone who shows up and says, hey, Mona Lisa, I have this ready. I've already sent so-and-so to Desiree. Ding, ding, ding. Check off the list. And then for whatever those things are that are on those checklists, just working on those, and then even if you have questions or whatever, staying in touch with one or both of us, so that we know what's going on with you. And then one other thing, life happens, y'all.
Yes.
In the midst of the journey, in the middle of the process, life is still lifing.
Yep.
And she talked about wanting to purchase a car or somebody needing to purchase a car. You might need to buy a car during this time. I don't say want to buy a car, but need. If your car is dead and you
don't have no car,
then you need a car. So, but before doing that though, call your lender.
Yeah.
That's when you call me. When you call me, I'm going to say, okay, I understand, but I'm going to need you to call the lender. Because one of the things is they will be able to best facilitate the type of loan you're getting or how much or anything that may or may not make a difference in your pre-approval amount.
Right.
And then also, this is not the time to go buy that luxury car if you need a car. If you need to buy an ABC, something that will help you get from A, B to C, then that's what we're going to get right now. Something that will allow you to be able to go to work. But these $8, $9, $10, $12, $1,500 car notes, that's a no. That's a hard no. Unless you are clocking a whole lot of coin when you get paid on your job.
Right.
But right now, I won't say things are impossible, but whatever moves you make during this process, if you're desiring to have a house, it is important and it is imperative that you maintain contact with us so that we can guide you for what's best for you.
Yes, yes. Because I've had people say they need a car, and I'm like, okay, when you go to your bank to apply for that loan, what does that monthly payment look like? Because I can plug that in to your debt to income and say, oh yeah, we're still good. Like, it's not preventing you. It's just being aware of what you're doing, and we're not finding in on the back end or before closing.
I think a year or so ago, there was a gentleman that I was assisting, helping him get prepared to buy a house, and he was going to be moving here from out of state.
Yeah.
He went ghost for a little bit. Then he shows up and he was ready to look at some houses. And on the first conversation, he said, you're going to be upset with me.
Yeah.
I said, sir, what did you do? He said, I bought a car. I said, please tell me that you did not buy one of those $800, $900 a month cars. He said, it's $1,200.
Oh, Lord.
The next part of the conversation, it was nice. It was nice. But he was no longer qualified to buy a house, y'all. Yeah. So we do not want that to happen. If home ownership is your goal for real, then talk to your lender, talk to your realtor before making any moves.
Yeah, that's definitely a conversation you need to have. So we're going to move on to, all right, we got the clear to close.
Ding, ding, ding.
We love that line right there. If you are a lender, real estate agent, in real estate, in any type of capacity, them words you like to hear.
And so share with them, though, what does that mean? When they get that call, when they get the text, the email, you are clear to close. You and I jumping up and down excited, but they need to be excited too, so let them know what that means.
So the home buyer has basically checked off everything we needed to get to that point. So the underwriter comes with stuff. They need to verify income. They need to verify your homeowner's insurance that you got on your home. We are looking at everything that's reported on your credit, making sure that hasn't changed. But all the checklists that you get from me, your lender, is everything that comes from the underwriter. The underwriter says boom, 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 everything's checked off. Now we're finished. Like there's nothing else to check off, but we have checked everything. So anything that you maybe not clear of what we're checking, like I said, is income, is verification of employment. We're getting stuff from your employer to verify that what you reported on your pay stub is going to be consistent. Anything that's coming in as steady income, we're checking that. Like I said, the homeowner's insurance, that's another one that we're checking. If you have a home that has homeowners association dues, we're checking that. We got to make sure they're covering stuff on your townhome or the community that you're living in. So we're checking everything really behind the scenes for you to get this house. We're getting a appraisal done for you. So the appraisal is going to come back as well. We're checking off to make sure the appraisal is not pointing out anything that may, be an issue with you buying this house. We want to make sure, I tell people all the time, you want to make sure you get a home inspection and appraisal done, because you don't want to buy a house and then, and it's kind of a joke, but I be like, you don't want to know that there's a big hole down to the fire pits after you buy the house. You don't want to know that. You want to know that before you buy this house. So again, appraisals, inspection, all those things are being done to make sure you're buying this house, and you're not finding out anything after the fact.
And I want to interject something right there as well. There are times when I have been with clients and we've gone to a house, from what they could see, the house looked lovely. It's like, oh yes, this is a yes. And as the realtor, I said, no, it's not. Because my professional opinion, and just because of the things that I am able to observe and know that I need to look at with my own eye. No, I am not an inspector. I am not an appraiser. I will not get under your crawl space. I'll look in it, but I won't get in it. But some of the things that I see, some of the indicators, if there are like dark spots or watermarks in your ceiling, things like that, or if there's an FHA loan, there are certain things that I must look for. Is there broken glass in the house? Is there peeling or cracked paint? A plethora of things. So just know that your realtor is looking out for you even before you get to that point. A good realtor, I'm turning on water. I'm looking under sinks to look at the pipes to see if there's a water leak. Of course, I'm not going to know as extensively as the inspector does, but this is my reasonable service that I owe to my clients. This is the due diligence that I owe to you all, because for most people, this is the biggest investment that you will ever make, or one of the biggest investments. Therefore, I want to make sure that when you purchase this home, to the best of my ability, you're not riddled with buyer's remorse. Oh my God, why did I get this house? I should not have bought this house. I want all of us to be happy about your closing on this property and moving in. So I'm looking for some things as well. Again, I give my advice. I tell you what I see. You can choose to accept that, or you can choose to like it anyway. But I strongly always recommend a home warranty.
Yes. So we're at the closing table, and that is a great feeling once you get there, because sometimes I know I've worked with people a year. I know you work with people longer.
2 or 3 years.
So once you get to that closing table at the attorney's office and able to hand over those keys, to me, that's really what it's all worth. Because seeing them there with their families, their friends, and just knowing the whole journey they went through to get there, that to me, that is just, it's the amazing feelings.
And when you're working for a while with people for this process, they become like family. Not just simply clients, but people that we follow up with, that we might be invited to family celebrations.
Cookouts.
That's the type of relationships we have with people. And just sitting at that closing table, we've seen people cry.
Yes.
You know, there are lots of pictures that are being taken. Just the excitement, the gratitude, all of those things for getting to that point. Because there are many people that we help who never in a million years imagined they would be able to have their own keys to their own home.
Yeah.
They could be first generation homeowners.
Yeah.
And as Desiree mentioned previously, yes, she works with a lot. I work probably mostly with first time home buyers. I love it. And there's a certain joy that goes with that, to be able to see someone who thought they weren't going to be able to buy a house, to see them go into that house, to be able to get those keys. And then about the keys, people say, when do I get the keys? When do I get the keys? In North Carolina, this is how we do with the keys. Once the closing takes place, the settlement takes place, everything's assigned and done, the attorney's office must record the deed with the courthouse. Once we have it clear from the attorney's office that everything has been recorded at the courthouse, you then get your keys.
Yes.
So we're not backing up the moving trucks just yet. We're going to wait till it's recorded.
Yes.
And that's why preferably, a lot of times we don't like to do closings on Friday. Because realistically, something could happen and maybe the closing might be delayed and you've ordered a moving truck and it's not going. So, you know, and a middle of the week closing is best, because if we need to move it today, then you'll still have time to move that weekend. So these are just little things that a good realtor will share with you.
Yes, yes. Well, that's all the topics I have today, Mona Lisa. Do you have anything that you feel that the people out there need to know?
One more question.
Yes.
Just came to me. So what about someone who has just graduated from college?
Yes.
Someone who's just graduated from college, they've been in college, they might have worked part-time and they've gotten their first job outside of college, or maybe been working 6 months or a year out of college. Tell me what the criteria are for that person being able to meet the employability portion of being approved for a loan.
So that actually happened this year with a local person who graduated here from one of the great universities here in Greensboro, North Carolina. Gentleman reached out and he basically wanted to know what could he get pre-approved for. So he was still in school, had not graduated. But he was in a business program, so a company had already offered him a job. He had an offer letter. Had not started, but had an offer letter. So I could actually use that offer letter. The years of work can actually translate into the years of study. So if you were in school the last 2 years, but you are graduating in May of 2025, you're going to start working in July of 2025, we can pre-approve you.
I am so glad I asked that question. Because, I mean, there are many people, and I've talked to some younger people who are right out of school and maybe thinking about it. And so it's good to know that those education years can suffice.
Can translate into your job history. And these are not first people coming out of college. It could be someone who may have been in the retail industry and decided, you know what, I want to go into the medical field. Had been in nursing school for 2 years. Now's a nurse. Again, same concept.
Career switchers. Okay, wonderful. So that's good.
The difference is now you didn't just stop working. And then took on one, because now we got to start at where you're starting. So that is just. Some people may have been maybe a 1099. Now they're a W-2. We got to show at least a 2-year history in either or one of those. So we can't go from 1099 in January 2025 and then now you're a W-2 in August. Now we got to show 2 years of consistent as W-2.
Okay, wonderful. And so again, you know, when it comes to that loan and all of those types of questions, Desiree Stewart, your girl.
And I would love to answer them for you. Well, this was fun. And look, we like to talk anyway.
And we've done several transactions together. And so that's why I'm happy to be here with Miss Desiree Stewart today.
Well, thank you, Mona Lisa, for joining us on the Mortgage Talk. Peace.
We'll hear from you soon. Bye.